Hello, good day, guys. So today we'll be doing this market outlook on GBPUSD. So for context, we'll start from the higher time frame. So this will be analysis for Tuesday. This is just the Asian session. This will be the analysis for Tuesday, and let's go to the on our time frame. Let's do a bit of top-down analysis and give us a little bit of context of what is exactly going on. So on the market, right, we know we are in a bearish market. We made a lower high that made a lower low, another lower high here that made another lower low. Then we made a lower high back into supply. We should be expecting a new lower low to be formed, right? So that's what we know based on market structure. And for now, this is our main push, the lower high that made this lower low currently. That will be our bearish main push and where we should be focusing on. And what do we see? Price came all the way, grab all this liquidity, tap into that supply zone there, and lead to a bearish push. All right, so we have this bearish push right now, and this is what I want to explain. Currently, now all these zones will become retail zones. They are going to give a reaction, but they are not going to sustain. So that is what we'll be reading based on market structure. Now, let's add liquidity to this analysis. So once we start to add liquidity and internal structure, we can see that we made a lower low here, breaking the structure. We made a lower high, that made another lower low. We made a lower high into the supply here, that made another new lower low. We made a new lower high. You should be expecting a new lower low to be formed, right? So that's what we'll be expecting based on market structure alone. Now, coming to this current price action here, now let me bring back my drawing and explain what exactly. So this used to be a break of structure because this lower high made this lower low, breaking this small internal structure here. But right now we could change it to a liquidity sweep because we led to a bullish break of structure to the upside. So previously this was a break of structure. Why? Because we made a lower high that eventually made a lower low here. Then we made another lower high that made this lower low. So in terms of liquidity, we know that we were expecting bearish from these supply zones yesterday, or because price action is bullish, right? Price came to this demand, a small demand right here, and it led to a bullish push out, breaking the structure. So now our main push on the structure cycle, on the internal structure right now, is from here to here. This will be our bullish main push to the upside because we broke structure to the upside. Now, the other thing to notice in terms of liquidity, in the liquidity cycle, we know that we are supposed to be looking for sales. Why? Because once we see a build up, an inducement or some structure point that led to a new lower low, that's a sign that price will continue bearish. But right now we have seen a medium inducement that went to the opposite direction, and according to the liquidity cycle, which sorry, so according to the liquidity cycle, which I already pioneered in my strategy, once we have a medium inducement opposite the direction, then we know it's going to affect the flow of the market for a short or long period of time. It can easily change the direction of the market. So we have a medium inducement here, which is not only previous day's low, we took our liquidity of previous day's low structure points. We took a lot of liquidity with this move and we led to a bullish push out. So we know now that we are in a bullish market, and where could the destination be? Now, first of all, when I look left and I try to find a supply zone that could easily continue the bearish market, I found that we have a lot of liquidity. You can see all these are just trend line. That's why I mark it out. All these are just trend line liquidity, and there is no clear zone to sell from. So I take note of that. We could just be doing a bullish move, higher high, higher low, higher high, till we come to this high here. And this high will not be a very strong zone. It will not be a strong supply that could change structure because it didn't lead to a break of structure. It actually came back down into a level of demand here, and we continue bullish. So most likely price might come, sweep all this zone, or maybe even sweep these highs here, Once we sweep those highs, then we can continue bearish, or if the market structure is still bullish, then we continue bullish. We are just going to follow the internal structure. So that framework could be that we could just continue bullish like this, because this supply here, as you can see, there's no imbalance, there's no strong reaction from it. We could continue bullish, or we could continue bearish to the downside. So that way we know that this high here is not a strong one. Price could come to it, give a bit of reaction, boom, take out of the zone, and we have now established a new bullish market. So I'm not going to be fighting that trend now, but that is something that could possibly happen. Now the other scenario that could also happen is price could easily just sweep this liquidity here and continue bearish. Maybe price, this was another inducement, we don't know yet. This could be another inducement to continue the bearish structure. So that's just framework of liquidity cycle that we have not concluded yet. So the main thing to focus on today on this price action now is the fact that we have a bullish push to the upside. So having this bullish push now, we could find our valid supply or demand zones, right? So let me take this drawing out. This is just for demonstration. So now where could be our demand zone? Now this demand zone actually here, our swept liquidity mitigation is a valid liquidity cycle, build up, inducement, break of structure, mitigation, continuation. Now you can see all this trend line. There is no valid demand zone right here. The only demand zone I mark out is this last other block with imbalance, because it led to this break of structure right here. So the other thing to see is this demand zone below here. This is the origination of the bullish push. So this is our extreme. Now let's build daily cycle around this story that we have already established, right? So let's go to the 15-minute time frame now. Now what have we concluded on the higher time frame that could help us on this day? Now we know that we could be doing a bullish move because of what I just explained, continuing the bullish market because there is no valid supply zones around here. We could start a new bullish market. That's just one. The other thing we could know is we could easily just, this could just be a sweep of liquidity and continue bearish, right? We don't know also, but what we could know now is there's liquidity around here, and there's a valid demand zone around here, and there's a valid demand zone, there's a demand zone around here, not actually valid that much. Now let's build daily cycle around that. So we'll bring out our indicator, and what could we be expecting on this day? Now there are few roadmaps, there are few reasonable roadmaps that we could expect. Is price could create a smart money trap around here, maybe a Shanghai sweep or a Shanghai bearish move. So we could be doing a bearish move like this. So we come to this demand zone. Now we know this is a higher high, right? This is a higher high and not a supply zone just yet. So for example, this is one roadmap. This could be a higher high. We know a lot of people could be looking for sales if we have internal break of structures around here. So we know that internal structure is still bullish. So once we come to this particular demand zone right here, we could be doing maybe a bullish move like this, or maybe sweeping this zone before starting a bullish move. We could break structure to the upside and we continue bullish, right? So we know we are now following that trend. So this is a valid roadmap, and this could be London open, internal break of structure, continuation to the upside. The other roadmap could be, which I see is more valid in my opinion, is we could be creating some kind of a trap here, maybe Asian high sweep during the Frankfurt open, giving a breakout structure like this, and boom, price shoots up, take all that liquidity, take early sellers, take all this liquidity during London open, because they are seeing lower low internal breakout structure. We takes them out like this, and we could be doing a bearish move to the downside, mitigation and continuation to the downside. And where could that destination be? It will be the demand zone, this valid demand zone that I just explained. And if market is still bullish, then we continue bullish from there to the upside. So this one, another valid daily cycle roadmap that I'm seeing right now, and these are the most favorable roadmaps that we could expect, right? So this could be all just be trendline liquidity. We have a sweep, and if price sweeps the liquidity, for example, we have something like this. Price comes here, right? Give a reaction, boom, we sweep the liquidity just as I explained, and give a bearish breakout structure. then we could be doing a bearish push to the downside, right? And this zone here would be a reaction point, so just give a bit of reaction and we continue bearish, following what, following, as you can see, all these things are still going to align with market structure, because you're just going to say, okay, we are in a bearish market, right? This lower high, that means this lower low, price came to it sweep the liquidity of that supply zone and we continued bearish. So we would analyze it this way, and you will see that, okay, price continued bearish after sweeping previous day's high, Friday's high, and a lot of liquidity was swept and we continued bearish. So these are just framework for the day, not exactly what we are going to trade. So we are going to wait. This is 1 hour away from our London Open. We are going to wait and see the roadmaps that we could get for this day. So thanks for watching, and that will be all for now.